you really should be trying to watch as many webinars as you can, even if you're not able to invest in that many deals. And not to be like you should be, watching, 5 webinars a week, but honestly, that wouldn't be a terrible idea, because what that allows you to do is that allows you to learn markets, asset classes, and I mean, of course, about the groups as well. And that's very, very important. Welcome to the Cash Flow Chronicles. I'm your host, Jonny Catani, and the founder of Catani Capital Group. For the last 2 years, I've been studying alternative assets and now help solve the problem of creating passive cash flow for creators, influencers, and busy professionals by bringing you 5 episodes a week of easy to understand education in the world of passive investing. What's up, guys? Welcome to another episode of the Cash Flow Chronicles. I'm your host, Jonny Catani, and welcome to another solo episode number 277. Crazy to think that, well, I've recorded over 300 episodes, but it's crazy to think that in a month's time, there will be 300 published episodes from the podcast. I mean, just absolutely crazy. Obviously did my 1-year reflection, but 300 is a milestone. That's a lot. And, that's basically about 5 years, I think, of a weekly episode. So really, really excited about that. Stoked you guys are here listening, starting to get some real interest. If you have not listened to the episode last Wednesday, I believe, when I talked about the oil and gas deal and kind of pivoting and, why it's important to stay open-minded as an investor, go listen to that pod, because there's a lot of good info in there and starting to get a lot of attention from that episode due to the deal. Actually fielded a couple emails of people who listen to the podcast and are interested. So it is a 506c. It's for accredited investors only, which is why we're able to talk about it. But go listen if that's something you'd be interested in. Really incredible cash flow, as well as a huge upside. Basically 3.5x equity multiplier. And I believe it's about 18 to 21% annualized cash flow. So really, really awesome deal, especially if you're a real estate investor and you don't love the numbers you're seeing. I think you'd be very interested in this as an investor. 3 to 5 year hold period on that as well. Waiting to get the replay of the webinar. And then once I can rewatch the webinar, because I was on it live, and there's so much information given on those webinars. If you've ever watched a webinar, there's so much information. So as someone who's, jumping in on the deal, going to get involved, for me, it'll, 1 or 2 more times, take some notes, pause, rewind, having that ability is a huge game changer. And to be 100% honest with you, when it comes to webinars, maybe I should just make this episode on watching webinars. That's a good idea. I was going to talk about something else, but I've got some more solo episodes, so I'll save that other topic. So let's talk about webinars out of nowhere. I love this. So webinars are obviously a key to investing, right? Because that's where you're going to meet the team. You're going to meet, the sponsors, the operators, capital team, the asset management team. You're going to get a full rundown, top to bottom of what the deal looks like, why they like the deal, why they like the market, why they like this exact location, what the story is. They're going to tell you the story. A good operator should have the story of this asset, and a good webinar should tell that story. What's the story that they've been able to gather from the underwriting? What was management like previously? Has it been mismanaged? Is there a lot of deferred maintenance? Why was there deferred maintenance? Was the previous owner in over his head and it was too big of a project, or had other things going on? Is it a developer who typically developers don't have the infrastructure to the company infrastructure to manage, and typically what they'll do is they'll build it and then they'll get it stabilized and then they want to sell it. So maybe the developer had to hang on to it longer than he wanted to. And a lot of times If it's from a developer, then it's typically there are concessions, right, to get it stabilized. So stabilized is 90% occupancy, physical occupancy, meaning, 100 unit complex, 90 of them are occupied, meaning leases signed, someone lives in there. That's what physical occupancy is. When it comes to developers putting, people in there and filling it and getting it to that 90%, they'll typically give a reduced price. So let's say the market be $1,000 typically, right, for that area. They might say move-in special $900, right? So just right there, you're getting a discount, or the tenant's getting a discount, but as the new owner, once you buy from them, that's, an immediate value add you're going to get to do when those leases come due. And a lot of times it's happening so fast. So those leases will kind of, they're tranched, getting 90 leases, they're not all going to be signed on the same day typically. So what's going to happen is, those leases will tranche, and that's immediate value add. And sometimes within that year, it's gone, it should have gone up. So what would have been 1,000, maybe you get to raise it from 900 to 1,050, right? So they're going to tell that whole story and what their plan is, right? If it's a big value add, what they're going to do, how they're going to do it. Maybe they're going to make a nicer parking lot, or maybe they're going to add covered parking and, put in a playground and whatever it is, right? I'm mostly obviously referring to apartments, but they're going to tell the story of what happened previously from the previous owners and what their plan is going forward. And then they're going to go over the numbers, right? The returns, the whole period, why, typically 3 to 5 years, what they plan to do. Have they done this before in this same area? A lot of times they'll have a similar asset in the vicinity, and they're like, oh, we were actually able to hit pro forma rents in the first year as opposed to by year 3. So they're going to tell you that whole story. And then, of course, they're going to come at you with kind of the scarcity, right? Like, urgency. Hey, we're closing in this date. It's typically, they typically give it, 4 to 6 weeks usually before, money's due. They're going to, tell you, oh, we were already 30% subscribed, which, don't get me wrong, a lot of times it is true, especially because sometimes they'll send it out. A lot of times what groups will do is they'll send out, so like, let's say they plan to do a webinar on a Wednesday. So let's see, they'll send it out the Friday before. Just no webinar invite. They'll just send out the deal the Friday before to their list. And then on Monday, they'll announce the webinar, so that when they announce the webinar, they'll be like, oh, webinar for XYZ asset. We're already 30% subscribed because, if you have a big list and you're a good operator and you've been doing this and you've got a good group of investors, then you typically will, get your, a lot of these big groups, these solid groups have, investors that are investing, millions of dollars with them a year. And they'll typically spread that out amongst all of their deals or a few of their deals, right? So it's not just $1 million into one deal. It might be 250 in this one, maybe 250 across 4 deals, right? So they always know they can count on, X number of investors for X amount, typically. This is typically speaking. So then they'll go into the webinar and be like, oh, we're already 30% subscribed because, they've released it to their list. And, and you're on their list, right? If you're getting the webinar invite, then you're typically going to be on their list. So then at the end of the webinar, they'll be like, again, they'll harp on the 30% subscribed. Here's the instructions on how to do it, on, how to subscribe, go to this link, fill out the paperwork, soft commit, right? They'll typically try to push you beyond the soft commit. So once you soft commit, they're typically trying to get you on the phone, see what we got to do to get you across the finish line to invest. So for me, how I approach webinars is I don't typically watch them live. They're usually during a time like, you know, a lot of times they're at night for sure. And sometimes at night, if it's like 6 p.m., like they'll do like an 8 p.m. Eastern time, I'll watch it live sometimes. But for me, I like to watch webinars on the replay. And then that way I can like pause, rewind, take notes. And as an investor, you really should be trying to watch as many webinars as you can, even if you're not able to invest in that many deals. And not to be like you should be, watching, 5 webinars a week. But honestly, that wouldn't be a terrible idea, because what that allows you to do is that allows you to learn markets, asset classes, and I mean, of course, about the groups as well. And that's very, very important. I've talked to ad nauseum about how important it is to know who you're investing with, right? Know, like, and trust. But watching webinars is a lot like listening to podcasts, where you're going to eventually pick up on these tendencies of like, in these like market data. So for instance, if you watched 5 Houston deals, right? 5 webinars for the city of Houston, assets in Houston, and they're in 5 different areas, well, you're going to learn about the different parts of Houston. And, then you'll understand, the microeconomics of Houston, and, whether or not is in a flood zone. Houston, literally a block can be the difference between a flood zone and not in Houston, which is why I'm using it as an example, because it's got some extremes. And so that will allow you to understand, okay, is this a flood zone? Like, what does that mean? Why, what do they have in place? Right. So then you start to pick up on these things and these tendencies, and all this data is being fed to you. And you start to learn, you start to build your thesis and understand your thesis, right? For me, not like, yeah, sure, there's probably a better return profile in a flood zone, but I would rather get a 6% return over a 7% return and then not be in a flood zone. But that's just me. There are plenty of people who would rather have the 7% return and take the risk of investing in a flood zone, right? So that's why watching these different webinars can really help you build your thesis, because it can help you understand, like, maybe it's a completely different asset class, like for instance, car washes, right? Car washes are starting to get really big. Guys over at passiveinvesting.com, shout out to Dan Hanford, doing a lot with car washes, and a lot of groups are. But, to understand why car washes are such a good deal, sure, you can watch one webinar, but imagine if you watch 5 webinars, right? You'd really understand the business strategy behind car washes, what makes them such a compelling asset class. Why is there so much cash flow? What is the business strategy? Why are you able to implement that business strategy? Like, for instance, there are car washes, like there are opportunities in car washes to literally buy the land and the car wash, but you're not the operator. So you're literally triple net leasing the car wash itself. You literally own the equipment and the land, but a group comes in who's like, this is what they do. Maybe they have like 6 or 7 locations in that state. I'm talking about this because I've been looking at them here in Utah. And so these groups you'll have like a corporately backed triple net lease, meaning, hey, if something happens with this location, we have, X amount of other locations, say 6 other locations that are doing, these numbers. This is the EBITDA or whatever it is, NOI. They probably use EBITDA for car washes, but this is the NOI, and, we'll be able to back it up if it doesn't work, right? Basically trying to sell themselves as a good operator to come in, and it's a triple net. You don't do anything. You just collect every month, right? All this cash flow, and it's basically more or less a passive stream of income, which is why people love triple net so much. But you can do it for something like a car wash, right? But to learn that, you've got to go watch these webinars and understand that and learn about it. So webinars are I strongly, strongly encourage you to watch webinars, especially as a new investor. Get on as many lists as you can, the top groups, watch their webinars, especially the replays. That way, you know, and ask questions, you guys. Do not be afraid to ask questions because there's no, I promise you that 10 other people have the same question as you. And like on that oil and gas webinar that I watched it live. I had a question about how the structure is done because these deals, there's only a couple ways you can structure them in order to get, the active income offset. So, so there's really a lot of value to watching them and especially the replays. But the thing you miss out on the replay is you can't ask a question. But there's still the Q&A. They keep that in there. And a lot of times I'll do things like, for instance, what I've been taught when it comes to webinars is, maybe have 3 to 5 kind of frequently asked questions. Be like, oh, okay, now we're going to jump to the Q&A. We got, 5 questions from emails before the webinar started. Let's answer those first. Typically they did not, but they're frequently asked questions, that a lot of like just the ones you want to clear up first. For instance, if you were watching a webinar for ATM fund, which is a pretty popular cash flow investment. If you're watching a webinar for ATMs, the biggest question is, well, what about digital banking? Like ATMs are a thing of the past. Well, boom, we're gonna nip that right in the bud because we know probably 8 people here have that question, right, or more. So it's really, so even in the replay, you're still gonna get that Q&A portion, right? So, and then if it is a deal you're interested in and your question didn't get answered in the Q&A, well, it's just a simple email to the operating group to get the question, right? Or a phone call or whatever it is. So they're very, very, very valuable, even if you're not going to invest in every single one. It's really awesome to watch them. And you also get to learn the different management and business styles because not every value add or B class or even A class operator operates the same way. Are they vertically integrated? Is it their property management company or are they bringing a third-party property management company? Have they worked with this third-party management company before, right? So kind of all of these things that you can really, really learn on a webinar. In fact, you know what I'm going to do? All right, here's what I'm going to do. It won't be out in time for this, but I'm going to create a webinar checklist of things that you should be curious about and paying attention to on webinars so you can learn how to be a webinar master. I'm going to call it the webinar master checklist. Boom. All right. That's going to come out. You got to be on my list to get it though. So go to my list, subscribe, investwithkatani.com, join my list. Video series is coming out soon as well to help you learn how to be a passive investor. I'm going to not make a video on webinar checklist, but that will be part of that value add as well. So go to my list, get that, and I will be sending that out. So thank you guys so much for listening. I hope you enjoyed it. Very impromptu. This is not what I was going to talk about, but the topic I was going to talk about, I will talk about this week on another episode because I've got a few solos again this week, as well as not sure if it's going to come out this week. It might be all solos except for Michael's awesome interview yesterday. Michael Flight, guys, go listen to that interview yesterday with Michael Flight. He is tokenizing and putting real estate on the blockchain, and it's absolutely incredible. He's extremely intelligent, also just a great guy, good friend of mine as well. I mean, just so quirky. He's so much fun to talk to. So if you want to learn about real estate on the blockchain, go listen to that episode. Thank you guys so much for listening. As always, I really enjoy these solo episodes. I'm going to be honest. So thank you guys so much for listening. I will talk to you guys again this week. So a lot more solo episodes coming up. And then starting in May, we will be at 3 episodes a week. So we're going to reduce the episodes a little bit. So thank you guys so much for listening. I will talk to you later. Have a good one. Thank you again for tuning in. Who do you know that wants more cash flow? Share this episode with them so you can grow your cash flow together.
If you enjoyed the show, make sure you're subscribed on your platform of choice so you never miss a new episode. Go to KataniCapitalGroup.com to learn more.